Welcome back to another episode of Palisade Radio. I'm your host, Karem Mahmood, and on today's show, we welcome Tommy Humphreys, who is an entrepreneur, investor, founder of CEO.ca. Welcome to the show, Tommy.
Karem, thanks for having me.
Let's begin by talking about your early days before you entered the mining and investment world. Had you always been interested in the markets, and what led you to focus on gold, silver, and the mining stocks? I understand you originally came from a computer science background. So was there a moment early in your life that made you want to invest and speculate in the markets? Talk to us about that.
Well, I grew up in Vancouver, Canada, which is a fairly wealthy town. And my dad himself is a money manager, and my mom and dad actually met in stockbroker training school in the late 1970s. So financial services are definitely in my lifeblood. My dad's quite successful, but he's the kind of guy who lives beneath his means. And so there were a lot of people around me growing up that had more. And I certainly wanted more. And I decided at a very young age that I wanted to be rich. And it was really during the dot-com boom in the late 90s that my first experience with the market really manifested. I was just 12 or 13 years old, but I got a brokerage account and was buying tech stocks, just trying to be relevant with my dad. So I bought some of the more conservative names like Microsoft and Lucent, and I was like almost high-tick the market as a 13-year-old, and subsequently lost half my money and didn't understand. But I had this obsession for the market and market websites, and bigcharts.com was the main site of the day, and I just used to refresh that site all the time. My parents split up at that age, and so the stock market became this great distraction for me. And I didn't really have much traction as an investor until I got quite a bit older. In 2010, I was doing a web design business, and it was a very difficult business to scale because there was always an ankle biter who was willing to do it cheaper. And so, despite the fact that we were winning some awards and doing good projects, it was just very difficult to make much more money than the hours that I could bill in the day. So I really decided in 2010 that I would focus full time on the Canadian venture market, which was a space that had kind of fascinated me. In Vancouver, there was really two ways to get rich, and one was real estate, and the other was penny mining and oil stocks. And just my guess it was my family background made me really gravitate towards juniors. And so since 2010, I've been very focused on the Canadian venture market and mining shares. And it was probably 2012, things started picking up, 2014. And then by 2015, I had some pretty good traction, both with the website and with some personal investments. So I hope that answers your question to some extent.
Definitely. Okay, well, let's move on to today and let's go through your investment process. First as a stock picker and then as a financier. I know you've had some fantastic success by picking undervalued and unloved stocks. So what's your criteria for speculating? What do you look for? And an investment theme that has fallen out of favor and forgotten about. Is this a classic way of you entering a market and taking advantage of that?
I would say that my process is very intuitive. And my intuition is formed by seeing a lot of deal flow. So I'm obsessive about the market. I try to know as much as I can about as many companies as possible. And it's when you understand the whole landscape of competitors and comparables that's where it becomes easier to see value. So I think it's critical if you want to have success as an investor to see a lot of deal flow and have a lot of context. That's sort of what facilitates my intuition, I think. As an investor and speculator, I have had some success in all different types of strategies and themes and some setbacks as well. I think the biggest thing that I'm focused on is price. When you are able to get into a story that's early stage and promising and cheap enough, that's where you can really get paid for the risk you're taking. If a story has got a 500,000 or 1 million or 2 million or 3 million market cap, for my small investment size, I can get a decent chunk of that business. And if my thesis is correct and the market will get behind that idea or that sector, then I can make a lot more money than, say, if I was getting involved with a 30 or a 50 or $100 million company. So I'm very price focused. I love things that are cheap. I don't mind buying things that are out of favor. I've done well buying things that are hated. Uranium stocks were really trash a few years ago, and I was able to buy into some deposits that had hundreds of millions of dollars invested in them with, for just a few $1 million market cap with full warrants. So it gave me extra leverage. So I think in mining, especially in junior mining, the pre-revenue stories, I mean, these companies are consuming wealth or consuming capital to create wealth. So they're constantly raising money, and dilution is obviously the biggest enemy of an investor. But I think you can find, special situations where a project that has had several $100 million of investment in a previous cycle that's trading for a tiny fraction of that. And I know it sounds almost absurd, but I've seen it happen time and time again. And like OVX was the uranium example I mentioned, and that was a few years ago. And Sabina Gold and Silver was another example. They had a $500 million investment to drill off their substantial gold deposit in northern Canada, and the valuation was under $40 million. So things like that happen in the junior sector because it's so volatile and polarizing, and stories fall out of bed and fall out of favor quite quickly. The share price is obviously a reflection of supply and demand. And when there's a lot more sellers than buyers, sometimes there are gifts, right? I think, you can either buy an investment because, or speculate on a small cap investment because you think the commodity price is going to turn and you can get rewarded there, or from a discovery, which is obviously higher risk, but higher reward in nature. New management also, I feel like I've done very well with when new management takes over a previous deal, and I have a relationship with that manager, and I know that they're competent and good quality people, but the market may not realize that yet. And in fact, their narrative or the promotion that they bring to the table could help revalue the share. So there's a lot of different ways I think an investor can make money in the microcap space and in the Canadian venture space and junior miners. Certainly not one size fits all, but price and leverage are things that I'm looking for. And with regards to today, what can I say? I'm looking to get involved with people that I know and have a relationship with at an early stage, people I know and trust that have a vision, that are aligned with shareholders, that have access to capital and the ability to tell a story that I think that can stand out in a very noisy marketplace. And my experience as a speculator is evolving from just being a young guy that's looking for a win anywhere he can to now I'm taking a little bit bigger positions and being a bit more patient. But I haven't had one strategy that's dominated my money making. It's been sort of a bit of everything, and that really is informed by context and seeing as many deals as you can. I think that's the most important thing.
Let's move on and talk about gold and silver today. What's your view of where the metals are? And has the continuation of this bull market now officially started in your view? What do you think is going to occur, say, over the next couple of years?
Well, my market, the Canadian venture market is extremely dependent on gold and gold sentiment. So I'm extremely biased to a positive outcome in gold and silver because that's what fuels our market. I have, I'm overexposed to space. So what I'm doing with my personal money is definitely in the pro gold camp. But with that said, it's like it's asking a butcher what he thinks of steak, right? I love the space. It's where my relationships are. I think technical analysis informs more macro global investors, and that's where when our market really takes off, it's when global investors are interested in our space and interested in gold and silver. I think there's no doubt that we're in an uptrend in both gold and silver, and right now we're in a healthy consolidation of the gains that took place over the spring and summer. The question is this a short-lived cyclical bull market, or is this the continuation of a secular long-term bull market? And I just don't know the answer. I think that's what everybody's trying to figure out. I'm sympathetic to the argument that there's currency wars continue to take place and zero interest rate policy. Those things are positive for our sector. And there's been the scarcity of new discoveries. That's positive for our sector. I believe you can make money in up and down gold markets being long the right companies. So I'm very exposed to the space. And I would say that it's not the worst it's been, but it's pretty bad. And that said, good stories, high grade stories in particular, are starting to see a bid. So I feel like we are in the beginning of a positive bull market, and we'll have to wait and see how that plays out, right?
Very good. Okay, well, let's talk about a few of the key books that have shaped your thinking and mindset when speculating within the markets, Tommy. What books have made a great impact on you so far?
Well, I'm a pretty voracious reader. I've actually kind of morphed to listening to audiobooks more when I'm walking the dog or going for hikes. So I'm trying to plow through a book or two a week if it's possible. But the things that really stand out for me on my personal journey, I think, were Think and Grow Rich by Napoleon Hill, which is, totally commonly cited book about wealth development, wealth creation. I think it was written in the 1940s or 50s. There's some arguments today that the author was not as reputable or successful as maybe he said he was, but makes no difference to me. I learned in that book things like, you are the average of your peers, and to build a network of people who were successful. And the best thing I did in the junior mining space was I sought out and built a network of experts. That was geologists, engineers, promoters, financiers, people that I could call for context on deals, and certainly sought the most successful people I could to build a network with. That's something I see you're doing with these interviews. But Think and Grow Rich for the single lesson of you are the average of your peers, I think is very valuable. And building a network in the junior mining sector is just the key for success, just as much as seeing a lot of deal flow. Mining specific books, there are two that really come to mind. I think The Big Score is just a critical read for anybody interested in the mining sector. That's about Robert Friedland's Diamond Fields discovery in 1994, 1995. It was an incredible story. Jackie McNish is the author. She's one of the greatest Canadian journalists. And she tells a story of this 10-cent penny stock that's looking for diamonds in Namibia that funds an exploration program off the side of its desk, essentially in Newfoundland, and finds a $4.5 billion nickel mine, and the development that unfolds, the drama and controversy, and the enigmatic promoter, Robert Friedland, behind the deal. I read that book in the summer of 2010, and I think without that book, I wouldn't be in the space today. It was just so inspiring. It's so exciting. It shows you about what is possible. And that was a 10-cent share that went to $200. And I know a lot of people in Vancouver and West Vancouver that have exceptionally beautiful architecturally designed homes as a result of that deal. So I love The Big Score. But the third and final book that I think I should mention is called Fleecing the Lamb. And that is a book about the Canadian venture market in the 1970s and 80s, and even previously. And it's an eye-opening book about what can go wrong in the space, and how promoters, brokers, and property vendors are at such an advantage to retail investors. I think it discusses a cost of capital being potentially as high as 50% of money going towards these brokers and promoters and property vendors. It discusses how much of a crapshoot the market is, and how risky and how crazy it can be. And I think for a retail investor to inform yourself by reading that book, you'll really know that the best place to be in the space is one of those three people: a promoter, a broker, or a property vendor. I think if you read those three books, you'll be well on your way to success in the Canadian venture market.
As we begin to wrap up, Tommy, is there anything else you'd like to share with our listeners today? Anything else on your mind at the moment?
Well, I think, I think I would obviously love to mention just a bit about CEO.ca and our community. We are a fast-growing, small but nimble team that's basically committed towards building information tools for Canadian investors. So CEO.ca is one of the most dynamic and fastest growing investment communities for the Canadian market. We have global investors. The site gets about 10 million views a month from about 250,000 people, and not as much, probably about 5 or 10% are participating and sharing comments, but we have live feeds from the markets. We have insider trade data, news, all these things designed around a mobile interface. So I think it's the fastest and most fun mobile investment product in the Canadian market. Serious investors, anybody serious about really making money in the Canadian venture market needs, I think, level 2 market access. And here I just want to plug our CEO.ca Pro service, which starts at $50 Canadian per month. And that is, I believe, the fastest and most dynamic market data product that's available on a mobile phone. And certainly it'll inform better trading decisions and help you see the rhythm in your stocks to make more money. That's what it's all about. I think we're in the beginning of a good time to make money in our space. And like that book, The Big Score, really discusses. The Big Score and Fleecing the Lamb. 10 and 20 baggers are possible for retail investors, and even 100 baggers are possible. I think that the better place to be for bigger returns is in private placements, where you can get warrants and additional leverage to the deals you're doing. But it shouldn't be lost on you and also your audience that the greats in our space, like Robert Friedland and Lucas Lundin and Ross Beatty and Richard Bork and Frank Schuster, the people that have made billions of dollars in this space, they're often discussed as investors, but really they're entrepreneurs and they're building businesses. I think the best way to create wealth in this space is to start companies or get involved with deals early, and or acquire and broker projects or become a broker in the space. So being the book. Sorry, one more book I could mention would be Seymour Schulich, Get Smarter by Seymour Schulich, one of the great Franco-Nevada founder, world-class resource executive. He has a chapter that says, be the promoter, not the promotee. And he talks about, he wears a t-shirt that says, I wasn't put on this earth to be promoted by other people. And to really create wealth, he recommends that, you become an entrepreneur and operator in the space. That's where the biggest 100 and 1,000 times your money returns are, I think, easier, more likely to be possible. But if you're more passive and are making this more of a part-time hobby, I think following sites like yours and getting on CEO.ca are just key things you do. You've got to expose yourself to as much information as possible. Discount everything you hear. Absolutely do not trust or put too much stock in any one person's comments or opinions. On the positive and the negative side, you can buy into a story that's being bashed tremendously and make money when there's less hate on the name. And at the same time, you don't want to believe any expert or any individual or overexpose yourself to risk. It's a high risk sector and can be a lot of fun to be involved with. And would love to see you and any of your readers on CEO.ca. I'm at Tommy, and easy to reach there Monday to Friday. And thanks for having me on your program.
Well, thank you very much, Tommy. It's been great having you on the show, and I'm sure we'll have you on again very soon.
Vice versa, Karim. And if you're ever out in Vancouver, please give me a call. I'll continue to be following your podcast, and hope everything's going great with you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?